So MDU Resources just dropped its latest earnings. And one number in particular, well, it should have sent investors running for the hills. But it didn't. In fact, the stock soared. In this explainer, we're going to dig into why, because this is a perfect lesson in why you can't always trust the headlines.
All right, so here's the big puzzle we've got to solve. The headline news looked absolutely disastrous, right? But the market? It had its best day in months. So you have to ask, what in the world did investors see that the rest of us might have missed in that headline? I mean, just look at this. On one hand, you've got a GAAP EPS number that looks like it completely fell off a cliff, minus 72%. But on the other hand, investors are pushing the stock up almost 5%, and on heavy volume too. These two things, they just don't seem to add up. But figuring out why they actually do make sense, well, that's the whole key to understanding MDU right now. Okay, so let's solve this mystery. The answer is all about what the company is today. The real key here isn't what's in the numbers, it's about what's not in them anymore. And here we go, this is the big reveal. That crazy 72% drop, it's basically just an accounting echo. See, back in 2024, MDU spun off its big construction business, Everus. They did this to become a pure-play regulated energy company. So the old numbers included that business, but this year's numbers don't. To get a real, an apples-to-apples comparison, you have to look only at the core business that's left.
And boom, this right here shows you what's really going on. Once you strip out that spinoff and you just look at the continuing operations, their core utility and pipeline stuff, what do you see? Earnings per share actually went up. Now, it's not a huge jump, I'll grant you that, but it shows positive momentum. And that is the complete opposite of what that scary headline number was telling us.
Okay, let's dig a little deeper, because the picture gets even clearer. Revenue, up a solid 8.8%, beating what everyone expected. That core EPS we just talked about, pretty much right in line with what analysts were forecasting. Now, there was one soft spot, and that was adjusted EBITDA. It missed the mark, mostly because of higher operating and maintenance costs. But honestly, that's a story we're hearing from a lot of utilities right now, and management is already on it, tackling it with rate cases.
So you see, the market wasn't just breathing a sigh of relief that the core numbers were clean. No, they were actually getting excited. They saw specific pockets of strength that are pointing to some serious future growth. So let's take a look at where that's all coming from. This is a great snapshot of the business. It really shows you the power of MDU's portfolio. You've got the natural gas utility with a seasonal loss, totally expected, by the way. This happens right before the winter heating season really kicks in. The electric utility, that's the bedrock, solid as always. But the real star of the show this quarter, no question, it was the pipeline segment. And I mean, it wasn't just a good quarter for the pipeline business. It was a record quarter. We're talking earnings jumping over 11%. And this was all driven by new growth projects coming online and just incredibly strong demand for their gas transportation contracts. This whole part of the business is just firing on all cylinders right now. So what does management do? They take all that strength and they send a really clear signal of confidence to the market. They actually raise the bottom end of their full-year earnings guidance. Now, what that tells investors is that the momentum they're seeing, especially in that pipeline business, isn't a fluke. It's durable, and they expect it to carry them strong through the rest of the year. Okay, so this is where it gets really interesting. We've talked about the solid present, but now let's talk about the exciting future. This is the real core of the bull case for MDU. We're talking about the high-growth catalysts that smart investors are starting to price into this stock right now. All right, I want you to remember this number, 580 megawatts. That is the total amount of power demand from data centers that MDU already has locked in with signed contracts. Think about that. In an industry where electricity demand has been basically flat for years, securing a new customer base this big, well, it's a massive game-changing win. It's huge. But what's really brilliant is how they're pulling this off. They're not going out and spending billions of dollars up front to build new power plants. Nope. They're using what they call a capital light model. They use their existing grid and they buy power off the open market to serve this new demand. It is so smart. It boosts their earnings and their returns like right away without this giant capital investment. It's a win for shareholders and a win for their other customers too. And believe it or not, the growth story doesn't stop with electricity. This quote here, it's talking about a proposed project called the Bakken East Pipeline, and it could be massive. They already have commitments that could bring in up to $50 million a year in revenue. But here's the kicker. This huge project isn't even in their current 5-year spending plan. So for investors, this is like having a huge, underappreciated call option on future growth. It's this major source of potential upside that's not even baked into the company's official forecast yet. All right, let's bring it all together. What's the crucial point here? It's how all these pieces fit. The messy headline numbers are history. The core business is solid. And now, you've got two very clear, very powerful growth engines that are just starting to rev up. So, what does this all mean for the stock from here? Well, as you can see, the next year, year and a half, it is just packed with potential catalysts. We're talking about a final decision on that Bakken East Pipeline, that new data center load starting to come online, the Badger Wind Farm firing up. I mean, each one of these events is a potential trigger that could make the market reprice the stock higher as all this future growth starts becoming today's reality.
And all of that, well, it brings us to our call-in stock.
So for all of those reasons, we are initiating coverage on MDU resources with an outperform rating. Our thesis here is pretty simple, really. We think the market is just now waking up to what the new MDU is. It's a cleaner, more focused company with this incredible 1-2 punch of growth drivers. You've got the data center business, which is a clear runway for near-term growth, and then you have the Bakken East Pipeline, which offers this massive, long-term upside that we just don't think is fully priced into the stock yet. That rally we saw after earnings, we think that was just the beginning. We expect the stock will continue to re-rate higher as all these catalysts play out.
This is not financial advice.